Good morning, everybody. Hopefully, y'all are having a great start to the year. Today is Tuesday, January 3rd. Let me just post this to the Discord, the right link, because I just linked tomorrow's. But we'll get started. So, SPY is off to a good start for the year, up 0.9%, or sorry, I can't read, 0.5%. At the moment, currently trading at $384, which is up from a close of around $382.75 last Friday. Currently, we're heading down. This morning's trend was good, and we're about to have some economic data coming out in about 30 minutes. So I think I want to trade that, and I'm probably going to do a put debit spread. So I'm assuming that there's going to be a sentiment shift from the pre-market after the PMI report is what it's called, the Purchasing Managers Index. So we go to the economic calendar. Today we have the manufacturing PMI. So it has a weight of 2 according to investing.com. And then there's construction spending, not as important, only gets 1 star. So main event for this morning is going to be the manufacturing PMI. Again, this is a purchasing managers index, specifically for manufacturing. So if we read this, it measures the activity of purchasing managers in the manufacturing sector. A read above 50 is good. A read below 50 is bad. The last report came in at 47.7, and the next report is expected, today's report is expected at 46.2. So they're expecting it to be bad. Last month was somewhat bad, but they're expecting this one to be worse. Good morning, Roddick. Good morning, UT. Good morning and Happy New Year to you, Aaron. Thanks for tuning in today. Let's head back over. So we caught a little bit of a bounce off of around $383.50, and I'm going to open a put debit spread. Again, I think we're going to get a sentiment shift after the PMI report. So I'm going to take on a put debit spread, and I'm going to assume that we're going to head down to this 383.39 price level. So I am going to create an alert with that price level first. When it crosses below, I might cover or close half of the position, but initial assumption this morning is we're going to go below $383. Currently, we're trading at $384.20, so not very far away, which means that we're probably going to pay a decent amount of debit to open this trade. Yeah, the bid ask is 35, 30, 35, and 40, so we might be able to snag this at like 38 cents a piece. Let me see. And for this trade, I'd probably be... All right, so it did end up catching a bounce on the 384.38 level for right now. So that means we can get in a little bit cheaper. I might be able to get them at 35, and probably wouldn't risk more than probably 500 for this. So maybe 15 of these at 35 is what I'm looking at. I do want to look out for the upside, obviously. Just like I set up the price level to the downside that I want to exit at, I also want to have a price level to the upside that I would probably want to exit. And I would probably put it between the middle of 385.25 and 386.55, the two price levels I have up top. So 385.25 plus 386.55, 771.8. Divide that by 2, and you get 385.90. So I'm going to create an alert at or above 385.9. And now these contracts are probably going to get more expensive. It's okay. Yeah, I think I'm going to have to get them at like 38, and I'm going to have to reduce the amount that I want to buy to 12. All right. That order did not go through. Come on now. There we go. Cool. All right, so I'm going to post that to the premium Discord. Let's see. And then I'll show y'all whenever I close the order. COA. Okay, so put debit spread, assuming we're going to go to that 383.39 mark is what I just opened. Just opened a new SPY put debit spread. This is a day trade expiring today. January 3rd is today's date. 1-3. And I picked them up at 38 each. All right. Sweet. All right. Markets. So I'm going to type in my analysis. Markets off to a good start for the year. 0.06%. But sentiment could change based on PMI report dropping in 9 minutes at this point. Planning to cut losses above 385.9 or take profits below 383.39. All right. Good morning and happy new year to you, Kevin. Good morning, Guile. If it comes in lower than expected, will the markets jump green? It depends on the narrative that's formed around it. So if it comes in bad, that is kind of a confirmation of recession. And I think that's going to be a very strong narrative to start the year off. We've already been talking about how 2023 is likely to have a recession. I think the odds are like 60% according to the banks. Not exactly the most trustable source, but according to the banks, there's about a 50-60% chance of a recession going on this year. So that's probably going to be the strong narrative over the next couple of weeks. So if this data feeds into that narrative, if the reports keep coming out worse and worse, then probably we're going to sell off over the next couple of weeks is what I would assume. I do have a negative bias to the market, though, so keep that in mind. I do have some UVIXI shares as well as call options. So I do obviously want the market to come down some, and this is based on a cycle that the VIX experiences every 2 to 3 months. So VIX is actually gapped up today, positive 5.6% is what it looks like. Interesting. But UVIXI is down 1.75%. Unusual, but not too surprised. UVIXI and VIX lose their correlation, especially whenever there's gap ups, so you don't get to take advantage of the gap ups for whatever reason whenever the VIX goes up. We're holding UVIXI together. Yeah. How is VIX up 6% and UVIXI is down? That's a great question. There have been reports of market manipulation with UVIXI and the VIX by Barclays and a couple other big banks. Could be that, but it is also a futures contract, so the pricing doesn't always reflect exactly the 1.5%. But I find it kind of weird that VIX is up 6% and UVIXI is down 1.72. It's very, very strange. But just find it funny that UVIXI and like VIXX and VXX are the only way that we can trade can trade VIX, but all of these are probably down this morning. Like if you look at VXX, down 1.2%. If you look at is VIXX one? No. What's another one? Can't really think of any right now, but basically all the ones that are you're able to trade as a retail trader are the ones that are down today. But yeah, SPY's actually going up a little bit. Went above the 385.25 mark. So let's keep an eye on the 385.90 mark above. I want to keep holding the options into 945, hopefully. So if we do hit that 385.90 mark, I might just close half of the position instead of closing the whole thing, because there's still a decent chance of that. The PMI, the Purchasing Managers Index report coming out in 5 minutes, could shift the market back down. Oh, God dang it. They couldn't have given me 5 more minutes for this. All right. Yeah, we just hit that 385.90 mark and broke right through it. So I'm going to close part of the position. I'm not going to close the whole thing. Just to reduce my risk in case I'm wrong, obviously. Open these at 38, 12 of them. So I'm going to close. I just want to close 4 of them. Reduce my risk by like $80. Currently, they're going for 23 at the ask, 21 at the bid. So I'm going to try to get them at 21. Close 4 of the 12 that I have open. And then I'm going to hold the rest into the 945 report. Could a bad report form the narrative of less aggressive interest rate hikes? Yes, that could be the case. But the problem is that inflation is way above where the Fed needs it at 2%. So, it's at, 7% is the latest report according to the CPI, and then the core PCE, the one that they like to use, is still at like 5.4-ish, right? So, given that, they still have a lot of work to do. Even if we go into a recession, we need to go into a recession in order to get rid of the inflation. The cycle of inflation, I'll talk about it after after I send this alert. But closing options alerts, premium 101. Just closed 4 of 12 SPY put debit spreads expiring today. 1-3 at 21 each. Strike prices were 383, 384. SPY went above 385.9, but PMI report still has 2 minutes until it drops. So decided to partial close. So could a bad report form the narrative of less aggressive rate hikes? Yes. But the problem is that we do need to go into a recession in order to get rid of inflation. And the reason for that is because we've created so much wealth over the last 2 years especially, but really over the last 10 to 20 years because of all the fiscal spending, all the money printing, and the 0% interest rates for the better part of the last 2 decades. So we need the higher interest rates in order to get rid of a lot of that wealth to alleviate the pressure of inflation. And if we don't, then people that are living paycheck to paycheck are the ones that suffer the most. And those people are politically more aggressive because the system is basically failing them, right? And there's a social contract between the government and the people of the country. And if that social contract is broken, the people get pissed off and they start to rebel, right? So if you allow inflation to keep eating away the buying power of the people that can't afford it, then you will have political unrest, which I don't think the Fed wants that smoke. I don't think that the U.S. government wants that smoke either. So that's my stance on it. recessions are a necessary evil in order to get rid of inflation. The cycle goes from inflation to stagflation. Look, we just got the drop on the PMI report. Inflation to stagflation, which is a combination of the economy slowing down and also still having inflation. And then finally, it goes from inflation, stagflation to recession. MC said no smoke. Does Robinhood have a minimum account for margin? Yes. Any broker that you open, you're going to need $2,000 minimum to have a margin account. All right, so we dropped down to that 384.5 level. These contracts went back up to the same price that I originally bought them at. Let's read through the actual PMI report because I haven't seen it yet. So let me go over to the economic calendar. So manufacturing PMI came in at expectations, 46.2 versus 46.2 expected, again down from 47.7 last month. So with it coming in at expectation, that is bad since it is lower than last month. But at the same time, that should have been priced in to some degree. Given that we did, fly up 0.7.9% this morning in the pre-market, I do think that we have a little bit more to give away. And maybe we head down to just the difference or the mid price between 383.39 and 384.10 instead of going all the way down to that 383.39 level. So 383.39 plus 384.1, multiply that by a half, and we get a new price level at 383.75. So I'm going to edit this one. Cancel that, and then it's 383.75 is the mark we're looking for now. Really? You only need $500? Oh, for live data. Yeah. Okay. But you gotta ride it better than a Tesla. All right. So we're trading at 383.82. We just hit that 383.75 mark. So these contracts are going for 46 now. Made $50. And the contracts at the bid price are going for 44. I'm going to try to get them for 45 if I can. Obviously, no guarantee, especially with Robinhood. You'll never get the best fills with Robinhood, but 45 is the mark that I set to sell these. Go over to the Discord. Oh, you can trade anything? Huh. Okay. Let him go. Like a shank cow. All right. There we go. Closing options alerts. Premium 101. Freemium. Just took profits on the rest of the SPY put debit spreads that expired today, 1-3, at 45 each, I think. Strike prices again were 383, 384. And I could have held those for a little bit more profit, but I'll take it. Take what I can get. Probably should have opened more, but can never really tell until after the event. Usually these events is what I thrive on. The sentiment shifts before and after the event is really where I kind of get my alpha, I guess, is what you could call it. So alpha is just the difference between how you perform in the market versus how the market itself is performing. But close them at 45 each. Closed 8 at 45. 4 at 21. So a total 21 times 4 plus 8 times 45. $444, 444, and then we opened that originally, I think, for around the same price, so we might not have. We actually lost a little bit on it, thanks to closing them whenever it was at the high. But 444 originally paid 444 total to open, close for that's not right. 456 to open. 444. So 456, 444, 12 loss. So that was my trade for today. I do want to look at Tesla. So Tesla reported their delivery numbers, which came in at 1.3 million, if I remember correctly. How are you supposed to grow your account if you're so limited? It is very hard to grow like a small account, I will say. You have to take on a lot more risk. But at the same time, you also want to reserve buying power. So it's a very difficult thing to do, but you can absolutely do it. I had a $3,000 account that I started a few months ago. I took it from $3,000 to $9,000 and then back to $3,000 because I put a lot of my money into like 2 or 3 trades, so I didn't diversify enough. But, had I diversified a little bit more and taken on more positions instead of the 2 or 3 that I put all of my money in, I basically put all my eggs in 2 baskets, I probably would have held that $9,000. But I would say spread options are going to be your best friend if you have level 3 options trading. And out of the money options can work. They are more risky in that they're more likely to expire out of money and you'll lose everything you put into it. But I mean, the same thing really goes for any options trade. You can lose whatever you put in, right? So you want to keep your position sizes small relative to your account size, which makes it a little bit tricky. If you're trading with a small account, let's say you're trading with like $1,000, I probably wouldn't risk more than like maybe 150 with each position. You want to be able to open at least like 3 to 5 different positions. You want to have like 3 to 5 different positions open. That way you're well diversified. And you want to diversify in terms of direction. You want to diversify in terms of how much volatility you expect. And you also want to diversify in terms of the expiration dates that you have set. But Tesla's dropping right now, 112. I guess the markets are coming down with it. Do I do leaps? I do have some leaps in my account right now. I have a gold leaps, which is doing really hot today. So I guess the dollar made its way down a little bit more, interesting enough. Probably recession fears is what's sending the dollar down. Actually, no, the dollar's up 0.7, but gold somehow is managing positive 1.3% today. So I have a gold leaps. So gold typically outperforms the overall market. During times of recession, you'll see gold outperform, and usually bonds will outperform during a recession. Industrials will also outperform, but they will see less growth. But gold has always been like the safety haven during times of recession, especially whenever the dollar starts to come down. That makes the value of gold that much higher. And then I have a Bank of America Leaps put option. This one I was just assuming that it would go to a new 52-week low. I think banks are going to have a very tough time, especially over the next 6 months, just because of how quickly the interest rates went up, and how slowly the housing market is coming down, right? So people just can't afford to buy a freaking house right now. So if you're having so many less loans that are being taken out because the buying power is just dried up, then banks aren't going to do hot over the next 6 to 12 months. It doesn't matter how much more margin they're getting out of the higher interest rates if they're not making any sales. Like if you're not doing any sales, it doesn't freaking matter what your profit margin is. only allowed to have level 2 options trading on Webull. You can still get away with level 2. It is much harder, I would say, just because dealing with out-of-the-money options. Again, it's less likely for the trade to work out. You can extend the expiration date. That'll probably help you out instead of doing like the dailies that I do. You might want to switch to like weeklies. You will pay a little bit extra for them. So if you have like $1,000 account, again, I wouldn't probably spend more than like $150 on each trade, but that's just my take on it. Started with 1K, have 4,000, feeling rich at 19. Good job, Lil Nate. Very nice. I wish I got started trading when I was 19 years old, but I had my head up my ass. I don't even remember what I was doing at 19 years old, if I'm being honest. Anyway, I got that gold leaps. Kind of thinking about selling a cover call with the gold leaps. Let's see. GLD, I'm really surprised that it jumped up 1.3% today. I'm not sure what's triggering a new high. I guess the recession fears maybe could fuel it higher. And it did gap up. Let's see. I have a strike price at $150, and I want to start selling cover calls on this. So I'm going to show you how to open a poor man's cover call. So I already had the leaps option open, which allows me to sell a call option against it because I have the right to buy 100 shares of GLD at $150. And since I have the right to buy it, I also have the right to sell the well, I have, I guess, the obligation whenever you're selling options. But since I have the right to buy, I'm able to sell an option against it. So what I'll do is I'll set my expiration date. I want to do like 3-week expiration. I don't want to do super close expiration just because you'll get a lot less credit for it. So I'm going to set my expiration date 3 weeks out. That does kind of worry me. I do think that recession fears are going to be amplified, which is probably going to send GLD up further. So what I'm going to do is I'm going to go with the lower delta value, which means that there's a smaller chance of the option expiring in the money to where I get assigned to have to sell the 100 shares that I'm buying at 150. Let's see. The 175 has a 33 delta. I'm not too comfortable with anything between like 20 and 30. I want to go below 20. But I don't think that the credit is going to be decent for it. So let's see. All right. If I want $100 credit out of this, I can do a 27 delta. We can also extend the expiration date to get more credit from it. So maybe I extend it for 5 weeks instead of 3. Or maybe even 6 weeks. We'll see. And I'm going to look again for around 20 delta or below if I can find it at a decent value. 179 strike price has a 23 delta value on February 3rd. And then the 181 strike price has a 19 delta value expiring on the 10th. That one I'm okay with. And that also kind of plays into my VIX cycle. So basically, if GLD does end up going up from where it is right now, trading at 171 to 181 by my expiration date, which is set for February 10th, I'm going to get $97 of credit no matter what. If the stock is above or below that level, I get to keep it unless I close the option. I'd be buying the 100 shares at 150, and I'd be selling the 100 shares at 181. This is basically a spread option, so my broker is going to facilitate this trade to where I don't have to put up the $15,000 to buy the 100 shares. But I'd be making $3,100, and I originally paid how much for the gold leaps. I originally paid $23.75. Okay, so 3,100 minus $23.75. I'd come away with $725 of profit plus the extra $100 that I'm getting in credit for around a $825 profit, which I think I'm okay with. So I'm going to sell this option in order to open it. The bid keeps dropping on me, but let's see. If I can get it for 93, I'd be pretty happy. All right. So just sold a poor man's cover calls. That's what the strategy is called, a poor man's cover call, and I can find the video to share with y'all too on this strategy. But basically, you buy a leaps option. Once you buy the leaps option, you can sell call options against it. You don't need to own 100 shares of a stock to sell cover calls. New options alert, premium 101, premium. Just opened a new GLD poor man's cover call. Strike price is 181, expiring, what was it, like the 10th, February 10, 93 each. Gold gapping up this morning, even with the dollar down, likely due to increasing recession fears going into 2023, but I think they will die down over the next 6 weeks. They're probably likely to keep going up over the next like 2 to 3 weeks, if I had to guess. But over the next 6 weeks, then you'll have the VIX cycle coming back down to the 20 mark, where it usually catches another bounce. But for right now, likely going to get more recession fears, likely going to get a further sell-off for the overall market, but gold should perform pretty well in recession fears. Tesla 117 call. Let's see. I'm looking at puts for this week myself, just based on the delivery report coming in at 40% growth instead of 50% growth. I think that's a pretty big disappointment for most people. I still think that 40% growth is amazing, given that the rest of the auto market is kind of capitulating and like losing market share. So I see 40% as a good thing, but the markets probably don't think the same way that I do. This might be a dumb question. I don't think so. But can't I just manually make butterfly option even with level 2? I've heard people able to open it in separate trades, but I've also heard other people not being able to open it. So you could try it out, see if it works. But I would just start with like a very small position on it, just to see if you can do it. I've heard mixed results on it though. All right, Tesla's trading at 110 right now. They don't have the earnings report for another 3 weeks. So I think next 1 to 2 weeks are probably going to drop because of the bad delivery report. My guess, they'll probably go below 105. It's very conservative. It's down like another 6% from where we're trading right now. Let's see if I can get it for cheap, though. That's the main issue with buying puts or even calls on Teslas. Are so freaking expensive. The IV, the implied volatility and demand for the options is so damn high that it's just super, super expensive. But I'm looking at the 108 put. It's currently going for 290. It has already dropped 9%. So, given that it's already dropped a shit ton this morning, kind of makes me think it's less likely. The option that I'm looking at is going for 300. I think I'd be okay with risking 300. It isn't out of the money. So, again, less likely that it expires in the money and makes a profit, but I think it's a risk I'm willing to take for it. And the rest of the market capitulates, then Tesla's obviously going to come down even more. These options are going for cheaper now, so let me see if I can snag them up at 275, 280. Oh, crap. I don't have fast enough fingers for this. That's why I hate trading Teslas. Big hoes like Santa. Hey, all right. I actually got it for a lot cheaper than I expected, so I'll take that. So new options alert. P1F. Just opened a new Tesla long put expiring this Friday, which is the 6th. 1/6. And I paid 2.77 for it. Strike price was 108. All right. So, Tesla delivery report disappointed at 1.3 million cars delivered for 40% year-over-year growth versus their expected 50% growth, likely to continue down with the rest of the market. I'll just leave it at that. I do want to come up with some price levels that I might want to exit at. I've got one right below it at the moment. Let me check out the 1 hour chart, see if we have any supports around here. So I've got 110.38. I'm assuming this is from the daily chart if I had to guess. Actually from the weekly chart. It's been a while since we've seen these prices before. This week, I guess. Let's see. I have a feeling that it will go to steady 117. It was up at 123 in the pre-market. Big money dropping it so they can buy calls. I did a 113 call, but it says the break even is 117. Yeah. You'll always pay more for the break even will always be higher on a call, and the break even will always be lower on a put than the strike price that you set up. Because you're paying a premium, so you're paying to open that option. So you need the option to move your strike price plus the premium in order to break even on the expiration date. TLT, bonds should do pretty well over the next couple of weeks is my assumption. It gapped up already, up 2.4%, so I probably wouldn't take the trade now. You could do a put credit spread, maybe assuming that it'll stay above either $100 or $99 over the next couple of weeks. That would probably be a decent assumption, but with the gap up this morning, I would maybe want to wait on it to come down a little bit more. That way you get a little bit extra credit. But, yeah, over the next 2 weeks, bonds should do okay, unless there's any events that would raise interest rates. So if inflation comes out really high in the next report, I think it's going to be next week, that means that rates have to go higher in order to fight off the inflation, discourage borrowing. which means that bond prices, whenever the rates go up, bond prices come down. They have a negative correlation. So I'd be a little bit wary about that next week. But you could set it for probably this week, and I would assume that you have a decent chance of staying above like $100. What was my strike price for the Tesla put? 108. I think I put it in the premium Discord, yeah. Yeah, 108 strike price, expiring 1.6. The gold cover call that I sold is up $4, which is good. All right. Let's see if we can come up with any new ideas for later in the week. We're already back down to negative for today. We have some econ data dropping tomorrow that I'll be looking out for, so we might take a swing trade based on that. How much cash do you need to do one credit spread on 0DTE SPY? You need $2,000 for a margin account to start with. The amount of cash or buying power you need, you could start with less than like $100 of buying power, but you need $2,000 of total portfolio balance to trade with margin, which is needed to trade spread options. But yeah, we have the JOLTS job openings tomorrow, so I think that's going to be the big event that I'm expecting at 10 a.m. The last jobs openings came in at, let's see, 10.3, and this one's expected to come in at 10. So this is probably going to feed into the recession fears if job openings continues to come down like the markets expect. But if the job openings comes in better than expected, then that would be a positive development based on the sentiment of a recession. That would go against it, but that would also mean that we need higher interest rates to get rid of the job openings. So it is kind of a double-edged sword, both negative. I think best way to trade that is neutral to bearish instead of just bearish. So I'm probably going to do this with a call credit spread. And this will be a swing trade, so this will expire tomorrow. It's already falling like a knife at the moment, so that makes this trade a little bit harder. We're going to get less credit because it's falling so hard. Gold gapped up this morning. Bought 150. Leaves expiring June 2023, so I could sell a 181 call expiring in February. That's the basic breakdown of it. I'll explain a little bit more, but all right, so Tesla's dropping a little bit more. The put that I opened is already up 10% at the moment. And I want to do a call credit spread for SPY. I do want to wait for it to come up a little bit just because it is selling off so heavily. Maybe if it comes back to 381.1, I'll want to close it, or I'll want to open it, assuming SPY is going to be below 384 tomorrow is my guess. But expiring for tomorrow, January 4th. So this is going to be a call credit spread, assuming that we're going to be under 384. And that's actually already paying an okay credit. Let's see. I'm almost tempted to also open some puts on it too. But I'm kind of worried about the markets kind of capitulating today, especially with Tesla down as much as it is at 9%. Probably going to drag the rest of tech down with it. But I don't know if I want to. Yeah, I think I'm going to wait for it at 381.39. Just so we can get at least... I guess it's not really going to make that much difference in the credit that we get. If I had to guess. Probably going to get like 33 credit. It's almost there already. In this trade, I'm willing to put up a little bit more risk on it. Let's see. And I would probably want to close if we go back above 383.39. So right now these are going for 33. If it's trading at 383.39, I would guess that they'd be going for probably around 55 cents if I had to guess. Actually, that might not be right. If my strike price is 384. Actually, you know what? We don't even have to do the mental math. We can go over to option strat. Have them do the hard part for me. So this would be a bear call spread, call credit spread. SPY is the ticker, SPY. Apple making a new low. Yeah, I think Tesla's just kind of feeding the tech market, just dropping like hell. But our expiration date is the 4th. Strike prices that I want is 384 for the... No, 385 for the long, 384 for the short. So if it's trading at 383.39, let's decrease this range to make it more granular. Go to the contract value, 383.50 we'll call it basically. They'd be going for around 45 cents. Tomorrow morning, they'd only be going for around 35 cents. Okay. So we'd only be taking like a $6 loss per spread-ish. If the assumption is correct, obviously. So 6, I'd probably be willing to risk like 600. I don't know if I want to open as much as 100 of these spreads. That would be kind of ridiculous. But maybe we open a little bit more. I think 30 of these spreads would be okay. So 900 total credit. Oh, god dang it. The bid just keeps dropping on me with SPY dropping like hell. Makes the risk-reward ratio that much worse. I hate it. All right. I opened them at 29. Or trying to open them at 29. Should clarify. No, didn't open at 29. I'm going to have to do it at 28. Oh, Jesus Christ. This market is brutal. My fingers just ain't fast enough. All right. So I got them at 28. Oh, hell. I only got one of them. All right. All right. So I opened all 30 of them now. All right. New options alert. So put or call credit spread assuming that we're going to be below 384 tomorrow's the trade. P1F just opened can't type. Just opened a new SPY call credit spread. This one expires tomorrow, so it's going to be a swing trade. 1-3 at 28 each. All right. JOLTS job openings tomorrow at 10 a.m. expected at 10 million openings versus 10.3 million last month. If report comes out to expectations, that will feed into recession fears. And if it's better, that means Fed has to raise rates more to curb inflation, to curb wage inflation, really. Double-edged sword. And likely to be bad. Either way. Okay. Put credit spread, Tesla, 107, 108. It's kind of the opposite to what I did, but good luck on it. We got German Shepherd. Isn't the Christmas rally still going on until late this week? Usually, yes. But you have to take into the context of each year. You can't just base it on any previous year. Like if you base it on like 2021, right? We had unlimited quantitative easing. The Fed was printing money like crazy, but now the Fed is doing the opposite. So you can't compare this year to 2021. You would have to compare it to very like years. So I think 2004 they started to raise rates, but they didn't really start to raise rates rapidly until I think 2006. And then 2017 or 2018, I think, is a like comparison. Do I use option flow data at all? No. I haven't used that at all myself. But the Tesla put that I opened is up nice 10%, up $30. Not bad. All right, we got about 8 more minutes until 10:30, and then I will head on off. I want to log my trades before I hop off of here. That way I don't forget to do it. Oh, shoot. I have to actually create an entirely new... Dang it. Okay. Physical therapy? Oh, man. Did you tear yourself up? I feel like I'm going to need physical therapy after what I'm about to do with my deadlift. We'll see. All right, so let me take the December trading log and just make a copy of it. Actually, no, I want it. Right-click, duplicate it, and then copy to a new spreadsheet for 2023. Options account, options trades. Change this to January trade log. Do I think that tech stocks will go up by January 6th? Not if we have recession fears, just because of how well they performed over the last 2 years when we had an economic boom. I would think that they would probably continue to come down if we continue to get the recession fears. Let's see. Is the Trading Journal template posted in the Discord? Yes. It is in the premium Discord, and you'll find that under the premium start page if you're signed up for it. And there is a 1 week free trial for the premium Discord. Let me actually pin that. I guess I never pinned that message. But there's a 1 week free trial period. So you can download it as soon as you join the free trial. If that's all you want out of it, it's fine. It's just some software that I made. So a bunch of formulas that I created myself. But let me zoom out. So these are the filled. So these are the ones you fill out yourself. The ones that are in gray you won't fill out yourself. Those are special formulas that you don't want to change. Oh, come on now. There we go. Meta went to 126 today. I haven't really checked on Meta in a very long time. Tropical Girl Yard Bandana. Ooh. Oh gosh. So much to delete. Okay, I can delete all of these rows, and these are special formulas, so don't want to change that. Don't really care about this for right now, but I want to update all the trades that I made today. So let me move this over here, and we'll start putting them in. So y'all can see how I log my trades too while we're at it. Options, trade. Oh shit. I think I had the wrong expiration date for the call credit spread. That might actually be a good thing. We'll see. Let me see. I thought I had set it for tomorrow, but maybe I done made a mistake. That might be a good mistake, but we'll see. 1-4. No, it's set for 1-4. Jesus Christ, my computer's being slow. Not cool. Dude. It's taking like 3 years to type this message. Unable to accept invite. I might have to see. Send me your username and the number after your username. And some people I actually ban just because they might be bots. If they are a bot. If I suspect them to be a bot, then I'll ban them. But send me the username and number, and I'll make sure that you're not on the ban list, and you should be able to join. Let's see. Alert. Okay. I will finish the session after I log my trades today. So first trade that I opened this morning for the first trade of the year was an L to start the year, but that's okay. Opened it today, obviously. So the third, closed it today, obviously. The third. SPY, it was a put debit spread. So the sentiment for a put debit spread is bearish, which will make this all red. Expiration date was set for today, the 3rd, 1-3. This should be filled in to where it shows the number of days till expiration, but that's okay. I guess since it's closed, it won't count the days to expiration. So strike prices were 384 for the long strike price on the put, 383 for the long strike price on the other put, and then opened 12 of these at 38 each, and then I closed them at an average 21 times 4 plus 8 times 45, 444 over 12, 37 each. So dollar loss on each one. Another trade that I opened this morning. The gold, poor man's cover call. I'm going to have to delete these. Oh, wait, no. God dang it. I need to delete these, I guess. I accidentally put it at the wrong place. This one I haven't closed yet, so I won't put a close date. GLD, call. God dang it. Call. Credit. No, it wasn't a credit spread. It was a poor man's cover call, which is a bearish to neutral-ish, I guess. It's kind of like a cover call or a credit spread, or a call credit spread. Expiration date was 210, and my credit for that trade, strike price for the short was 181. 150 was the long strike price. The leaps that I had opened. And the credit that I received for it was 93. And then, let's see. I opened, I think, one or two more other trades, so let me type those. Today's expiration. ESIC 3516. All right, I'll make sure you get added in. Tesla, put, long, put, bearish sentiment. Expiration is 1/6. Strike price that I had chose was 108, and I paid 277 for just one of them. I guess I should type in the quantity one here too. And then finally, 383, 385, 384, 385 call credit spread. So open that today. SPY, call, credit, spread, which is a bearish to neutral strategy. And my expiration date was tomorrow, 1/4. I accidentally typed in the wrong expiration on this. 1/4, make sure that's right. All right, and then strike prices were 385 in the long, 384 for the short. I opened 30 of them at 28 credit each. I need to start adding the amount of risk I'm putting on each trade. That would be a nice little addition to the spreadsheet, but looks like we made $81 today. I guess, I don't know why that's counting as a profit there. It shouldn't count it as a profit if there's no... Oh, it's because I put credit to exit. Okay. 0.93, so that'll fix it. So now I won't have any profit or loss for the trade. But yeah, that's all the trades that I've opened today. All bearish to start the year. Interesting. I need to diversify into some bullish positions later on, but we'll see. Figured out the Discord thing. Nice. New year, new spreadsheet. Yeah. And hopefully logging the trades every single day. That is my New Year's goal, is to make sure I log my damn trades, because if I don't, then I usually get screwed up. But yeah, that's all the trades that I made today. It's 10:35, so I'm gonna head off, and I will catch y'all tomorrow at 9:30 in the morning. See you, everybody.